what I am about to tell you. The banks do not want you to know. Actually, that is not entirely true. They do not care if you know, because they have been doing it for so long and so successfully that knowing about it barely changes anything. And that is what makes it genius. You walk into a bank smiling. You hand them your hard-earned money. You say, please keep this safe for me. They say, absolutely. They give you a little card, maybe a lollipop if it is a good day. And then the moment you walk out of that door, they get to work, making money off your money, while you go home and watch television. The bank is not your friend. The bank is not your enemy either. The bank is a business, an extraordinarily profitable business that has quietly figured out dozens of ways to make money from the people who trust it most. Today, we are pulling back the curtain on every single one of them. I am Zig. Welcome to Learn Finance with Zig, where we make money make sense. And today, we are exposing exactly how banks make millions off you without you even noticing. Let us get into it. Let us start with the big one. The one that happens the second your money enters the bank. It is called fractional reserve banking. Here is how it works, and I need you to really hear this. You deposit $1,000 into your bank account. You feel good. Your money is safe. It is sitting there, waiting for you. Except it is not sitting there. The bank is legally allowed to keep only a fraction of your deposit, sometimes as little as 10%, and lend out the rest. So your $1,000 deposit, the bank keeps $100 and lends out $900 to someone else. That $900 gets deposited into another bank account. That bank keeps $90 and lends out $810. That $810 gets deposited. That bank lends out $729. Your original $1,000 deposit has now generated thousands of dollars worth of loans, all earning interest for the banking system. And what do you earn for providing the money that makes all of this possible? 0.4% interest per year. On a good day, the bank takes your money, multiplies it, lends it out at 7, 10, 22% interest, and pays you back with almost nothing. Legal. Brilliant. Happening right now with your money as we speak? Section 2. The credit card. The beautiful, shiny plastic rectangle that banks absolutely love to give you. You know why banks are so eager to give you a credit card? Because credit cards are one of the most profitable products in the history of financial services. Here's how the bank wins every single time. Win number 1, interest charges. The average credit card interest rate is around 20 to 22%. You carry a balance of $2,000 for 1 year. The bank makes $440 from you, just from interest, just from you not paying it off. And most people are not carrying $2,000. The average American credit card debt is over $6,000. Do that math. Win number 2, minimum payments. Banks design minimum payments to keep you in debt as long as possible. Pay the minimum on a $3,000 balance and you will be paying it off for years, paying back nearly double what you borrowed. The minimum payment is not there to help you. It is there to help the bank. Win number 3, late fees. Miss a payment by 1 day. 1 single day. That is a $25 to $40 fee. Every time. Automatic. No mercy. Win number 4, foreign transaction fees. You go on holiday, you use your card abroad, the bank charges you 3% on every single transaction. For the privilege of spending your own money in a different country, your own money. Different country fee. The credit card is not a spending tool. In the wrong hands, it is a debt trap with excellent branding. Section 3. The savings account. The place you put your money because you were told it was safe and responsible. And it is safe. I will give them that. But responsible for your wealth? Absolutely not. Here's a scam hiding in plain sight. Your bank takes your savings deposit, lends it out to other customers at 7 to 10% interest on personal loans, at 22% on credit cards, at 3 to 6% on mortgages, and pays you, the person whose money made all of this possible, approximately 0.5% per year, sometimes less. You deposit $10,000 into a savings account. After 1 year, at 0.5%, you have earned $50. Meanwhile, inflation is running at 3%. Which means your $10,000 actually lost $250 of purchasing power in the same year. You earned $50. You lost $250 in real value. Net result, you were $200 poorer than when you started, while the bank used your money to make thousands. The savings account is not growing your wealth. For most people, it is slowly shrinking it, while looking responsible on the surface. High-yield savings accounts, available at online banks, pay significantly more. Some currently paying 4 to 5%. Same safety. Much better return. The regular savings account at a big bank. That is the bank's favorite product, not yours. Section 4. Welcome to the fee factory. Because if you thought interest rates were where banks made their money, wait until you see the fees. Monthly maintenance fee. Just for having an account. Some banks charge $12 to $15 per month just to hold your money. $180 a year for existing as a customer. Overdraft fee. You spend $1 more than you have in your account. The bank covers it and charges you $25 to $35 for the privilege. Some banks charge this multiple times per day. One study found banks collected over $15 billion in overdraft fees in a single year. $15 billion from people who accidentally spent $1 too many. ATM fees. You use a machine that is not your bank's machine. Your bank charges you. The other bank charges you. You paid $3 to $6 to access your own money from a slightly inconvenient location. Paper statement fee. The bank charges you to send you information about your own account by post that you did not ask for. Inactivity fee. You did not use your account enough. Fee. Wire transfer fee. You want to send your money somewhere fee. Account closing fee. You decide to leave the bank fee. They charge you to arrive, they charge you to stay, and they charge you to leave. If that is not the most committed business model you have ever seen, I do not know what to tell you. Section 5. Loans. Where the bank turns your need into their revenue stream with breathtaking efficiency. Let us talk about mortgages, because this one will genuinely shock you. You buy a house for $300,000. You take a 30-year mortgage at 7% interest. Your monthly payment is around $1,996. Over 30 years, you make 360 payments. Total amount paid, approximately $718,000. You bought a $300,000 house. You paid $718,000 for it. The bank made $418,000 from your home purchase, more than the house itself was worth when you bought it. And here's the clever part. In the early years of your mortgage, the majority of your monthly payment goes toward interest, not the actual house. Year 1 of your mortgage, out of your $1,996 monthly payment, approximately $1,750 goes to interest. Only $246 reduces what you actually owe. The bank gets paid first, always. Now, I am not saying do not get a mortgage. Homeownership builds wealth. But understand what you are agreeing to. Understand where every dollar of your payment is going, because the bank understands it perfectly, and they structured it that way deliberately. Okay, so the banks are making money off us from 17 different directions simultaneously. What do we actually do about it? I am glad you asked, because this is where it gets good. Fight back. Number 1, high-yield savings account. Move your savings from a traditional bank account to a high-yield savings account. Online banks regularly offer 4 to 5% interest. Same safety, 4 to 10 times more return. Takes 10 minutes to set up. Fight back. Number 2, pay your credit card in full every month. Every single month. No balance carried, no interest paid. You use their product, you get the rewards. They get nothing extra. This is the only way to win the credit card game. Fight back. Number 3, avoid overdraft fees. Set up low balance alerts on your phone. Keep a small buffer in your account. Link a savings account as overdraft protection. Never pay $35 for spending $1 too many again. Fight back. Number 4, use your bank's ATMs only. Or get an account that reimburses ATM fees. They exist. Find one. Stop paying $6 to access your own money. Fight back. Number 5, make extra mortgage payments. Even small additional payments go directly toward your principal, not interest. Paying an extra $100 a month on a mortgage can save you tens of thousands in interest and years off your loan. Knowledge is your weapon, and you just loaded up. So there you have it, how banks make millions off you without you knowing. Fractional reserve banking with your deposits, credit card interest and fees, savings accounts that pay you almost nothing, a fee for everything, and loan structures that have them earning more than the asset itself is worth. The bank is not evil. The bank is just extraordinarily good at business. And now, so are you. Because you cannot fight what you do not understand, but now you understand it, every single piece of it. Use that knowledge, move your savings, pay your credit card fully, avoid the fees, read your mortgage terms, make your money work as hard for you as the bank has been making it work for them. You deserve that. Your money deserves that. If this video opened your eyes, smash that like button, subscribe to Learn Finance with Zig, and drop a comment. Which of these surprised you the most? I want to know. I will see you in the next one. Stay smart, stay wealthy.